Welcome to the Rigatoni Capital podcast. It is in the morning of March 24th, and it is a very sunny day out on Wall Street, but it's cold. It's really cold. I guess I was like over editing the podcast for some reason. I took out filler words and I sent it to somebody who I knew was going to be honest, because I'll send the podcast to many people and they say that it sounds so great, man. Keep it up. But I know somebody that will give me a critique anytime he can, and he definitely didn't like the over editing. And I agree, it drives me nuts, the choppiness. WTI is trading at 92, 93 this morning. VIX also is up to 27, just up from 26 yesterday. The Kospi actually had a green day overnight. That's interesting. And we can look at just a few other things. Let's see. I'm sure the market's down because of WTI being green. But then again, Bitcoin is around 71 today, so that's holding in there. Gold is definitely a little bit down. Not a lot of anything crazy. I'm looking here at the 10-year, definitely up to 4.39. Doesn't look like it's shying away from the upside here. Yeah, like the NASDAQ 100 is down 0.43% this morning, pre-market, March 24th. Palantir has really had a run here, especially it doesn't seem to have got caught up in the AI disruption story, and then once this war started in Iran 2 weeks ago, the stock has just has been nothing but up. And then it went up again yesterday on some news, which we'll discuss. Look at TransDigm. I keep talking about TransDigm because I own it, but I own it like probably around 1,200 a share. Now it's trading. It's almost hitting its 200. No, sorry. It's well below its 200 day. This support line I have here, it has been a consolidation line for quite some time, all the way back to March 2024. And we're in the year 2026. So we're back to 2024 levels. In previous podcasts, I've discussed why I like TransDigm and why I think TransDigm has been in this range for a long time. I think it has to do with interest rates. You know, they acquire a lot of businesses. That's what they do. They acquire all of their businesses in their industry. They make it an ecosystem. And then they, all of a sudden, once they buy the company, there's a name for this in the business world, I just can't remember what it is. Once they buy a business in their ecosystem or a competitor of theirs or somebody in their industry, which makes, airplane parts, right? They all of a sudden see that company that they buy, their margins expand if they do it properly, which they normally do, and they increase that particular business's revenues or whatever it is, but definitely margin expansion. And they're like the king of this. And they have become almost, in any other world, a government would be like, "Wait, you're getting way too big here," because look at their market cap, 65 billion. TransDigm Group. I definitely think it's a great company, and I definitely don't know if this is something that is going to continue to break here. I just think that for long-term investing, not trading, of course, but long-term investing, I think TransDigm looks great here. I mean, if you're going to enter, this would be the entry point, not financial advice. I own TransDigm. It's probably 1% of my portfolio, but I've been adding it to each time we come down to these levels. I've been adding it. I told you about Waste Management pulling back the other day. That's interesting that it broke this consolidation period that had been going on since February 2024. Here you can see it broke to the upside, hit almost 248 per share, and now we're back to 230 per share. Really would have enjoyed to see another leg higher. If you're looking at the screen that I'm sharing you can see we have long consolidation periods and then a breakout. Long consolidation periods and a breakout. This is on Waste Management. We started to have a breakout and then it pulled right back. That tells you that charting is not the way to go always. It can sometimes help you in terms of when to enter or maybe when to trim profits or whatever. It kind of tells you a story. And I think if you are a long term investor and you're a value investor and you don't think that reading the tape is important, you're wrong. You're living in a different era or something, and you're definitely missing a big part of the puzzle. It's just one piece of the puzzle, of course. I'm going to show you a lovely stock that I thought was a great stock, which is Brown and Brown Inc., an insurance company. They kind of make their revenue slightly different than all the other insurance companies. I'm not going to get into that at the moment on how they make their, fees. And I just wanted to show you how this stock has been a winner forever. As you can see, it has been a winner forever. And the CEO, I believe his son, let's see, who is the CEO? Yeah, the company was founded by Adrian Brown and Charles Covington Owen in 1939 and is headquartered in Daytona Beach, Florida. The new CEO, I believe, is a family member, but people really like him. They used to buy back their shares pretty aggressively, but at a good price. They have a compounding system here, obviously, not a huge dividend player, but definitely one of the main insurance companies here in America. And I always thought the way they ran their business was interesting. It's a smaller company, right? The market cap is about 22 billion, and it has been 22 billion for quite some time because now we're trading at levels back from July, June, summer 2023. And I just wanted to show you guys this chart. And as a long-term investor, I just find it really interesting that this stock has gotten waxed so much. And obviously, they've come into a period where they're just not. This is their annual revenue. You probably can't see this because my face is in the way. And I don't like Trading View's income statement that they show. I wouldn't recommend looking at that. But as you can see, this company has been growing their revenue, but looks like their free cash flow, their net income, whatever you want to say. This is actually net income, net margins. The company hasn't been performing the best in that sense. But the insurance company itself, I mean, insurance companies have had issues depending on where they are, right? Depending on where they are in the country and what they're covering. But I think Brown and Brown may be getting hit just based off of AI disruption scares. They're kind of like a small little player compared to the big Chubb Insurance and Travelers and, the big ones, State Farm and Geico. And they're like kind of the medium, small brother, small mid cap. And I just think that this company is something maybe you want to research on your own. I'm not buying anymore. I do own the stock. I'm down a little bit. Again, it's less than 1% of my portfolio. So I'm not sure if this is something I want to continue to buy. I would need to do a little more research. Remember, I own about 50 different stocks, positions in the Rigatoni Capital portfolio. And, for me to sit there and do a ton of research on Brown and Brown, that I don't know if I need to do that. If I have time, I will do that. I do have this podcast now, so it would make sense to kind of do a deep dive on Brown and Brown. If you guys aren't interested in a small, boring insurance company, that I understand. I'm not going to get more views that way. Wall Street Journal did a nice little deep dive post featuring Jensen Huang, Nvidia's CEO's night at the opera, showcases role as AI kingmaker. There was this opera that Jensen Huang, I guess, put on. Maybe he bought tickets for everybody or he ran the event, and all the hot shots in the AI industry were there, and a lot of them were his investors, his clients, some of these companies that he is literally funding through, if you want to call it circle funding, you can, but some of these Neo Labs, and of course Grok with a Q. The new that CEO is there, and it's an interesting post. It's like your typical Wall Street Journal post. Here it is. It says Ross is the CEO. Yeah, we know he's the CEO of Grok. Shortly after Nvidia signed a non-exclusive license to use Grok's chip design, hiring away Ross and his top staff of Grok. This is Grok with a Q. The structure of a transaction allowed the chip giant to poach Grok's talent and tech without having to buy it. It's not going to give us a little brief on what Grok is here. You guys are going to expect me to tell you that. But as far as I understand, isn't Grok just like the TPU, the custom chip that does inferencing and training? And that is what Google is working with Broadcom on. It's kind of like that. This is Grok is the other competitor to that space. That's how I understand it. Here we show a picture in the feature on Wall Street Journal this morning that says Nvidia has secured chip purchasing commitments from a host of companies that it backs financially. This is what I was talking about. Select capital flows, equity investment, chip purchases, and infrastructure purchases and rentals. And it shows you kind of like a little bit of a circle funding type of photo here that, someone like a Michael Burry or people online say this is a bubble, but it shows you how Nvidia is the top of the circle, I guess you could say, and then below it is OpenAI, a company called Reflection, Poolside, and CoreWeave. And then it says, note, some chip purchases are through intermediaries. I think that makes sense. So anyway, if you own Nvidia or you're interested in Nvidia, I definitely recommend looking at this feature that was in Wall Street Journal. It probably came out yesterday, which it did at 9 p.m. So today's March 24th. And then, of course, after Jensen Huang does his GTC, the routine here is to kind of give a victory lap tour. That's how I understand it. So he went in the All In podcast, or whatever that podcast is called. And then he went on Lex Fridman's podcast yesterday, or it came out at least yesterday. And then breaking news, Nvidia CEO Jensen Huang claims AGI has been achieved. So we can listen to this real quick.
So let me ask you about possible timelines here. This ridiculous definition perhaps of what AGI is, but an AI system that's able to essentially do your job. So start, grow, and run a successful technology company that's worth
a good one or a one.
No, it has to be worth more than $1 billion, more than $1 billion. So you know how hard it is to do all those components. So how far are we away from that? So we're talking about OpenClaw that does all the incredibly complex stuff that are required to first of all innovate, to find customers, to sell to them, to manage to build a team of some agents, some humans, all that kind of stuff. Is this 5, 10, 15, 20 years away?
I think it's now. I think we've achieved AGI.
You think you can have a company run by an AI system like this?
Possible. And the reason for that is this. You said $1 billion and you didn't say forever. And so, for example, it is not out of the question that a claw was able to create a web service, some interesting little app.
So I don't know what you guys think about that. I don't really think it's that interesting. I think that it makes for an unbelievable headline. I think that Jensen Huang is a pretty smart dude and understands the landscape. And if you listen to the Lex Fridman podcast with Jensen Huang, what I thought was super interesting and not as bullshitty as it sounds like on the surface, Jensen Huang is really a person that can like manifest the future. If he believes in something, it seems to eventually become true. And we hear that always in the most successful people, that if they manifest something, it becomes true. I think that is definitely something that Jensen Huang has control over, his destiny. He can kind of have a good sense of the future and what it looks like in terms of AI. That I kind of believe. I mean, he has to be smart for him to think that way. He definitely has to be intelligent and creative. He's definitely an entrepreneur. He definitely is an engineer. He's definitely all of these things put together. He has all these skill sets that come together in one. And I think that he can see the future. Now, I'm not saying AGI is never going to be a thing. I just think in this context, it's more of just a headline, and I think we should move on, and it's not that big of a deal. What I think is a big deal is everything that comes in between and after and before during the podcast. The podcast is about 2.5 hours long. I would assume maybe it's 3 hours. I don't know. And I listen to it in chunks. So I listen to it before I go to sleep. I listened to it maybe washing the dishes or whatever. And I definitely think that you guys should check it out. Again, if you're an Nvidia shareholder or you're interested in Nvidia, how much does it take for you to do your homework on Nvidia if you're an investor? Is it $5,000 position? Is it a $10,000 position? Is it a $100,000 position? Is it a $300,000 position? When do you decide that as an investor and you have a good amount of money in the company that you start to do your homework and you start to listen to this podcast, and then you sign up for Wall Street Journal for $8 a month and you read this feature on Jensen Huang? That's what I'm trying to do. Like, even if you have a full-time job, I get if you have kids, it's really hard to even be watching something like this. You probably aren't, but because you're so busy, and I get it, because your kids are become your full-time job, really, along with a full-time job. So now you have 2 full-time jobs. So, but if you have a good amount of cash in something like Nvidia, when do you stop and kind of say, hey, I want to learn more about the business I own, and I want to kind of keep up with it? You know, somebody with an S&P 500, if they have, let's say, an index fund of $2 million of just S&P, or they're in VOO, and they have $2 million worth of VOO, you know, they may be interested in Nvidia because it's their largest holding there. It's a big chunk of money in that in their index fund, and they know it. They just are too busy, and that's okay, because VOO is meant to be passive. It's a market cap weighted index, so you don't have to be paying attention. But, you know, I own Nvidia individually. I've owned it since like 2016 or 17. I'm up 4,000% on the position. It's 16% of my Rigatoni Capital portfolio. I've trimmed profits, and I trimmed profits last year. I'm still up 4,000%. And, you know, this stock seems to be like in its prime right now. It seems to still have a few legs higher, which is incredible. I wouldn't own it if I didn't think it was going to be a $10 trillion company. You were probably like 4.5 trillion today. So I do see, you know, the rich getting richer. The larger this company Nvidia has gotten, the more that they could secure something like a Grok deal. Of course, they can't just buy ARM holdings and not get beat up by regulators. They definitely have had to find interesting ways to deploy their cash in M&A, and they have. And I feel like Jensen is executing it. There's no drama between Jensen Huang and the board members. And, you know, these are just things I'm picking up on as the years go by, that Jensen Huang really knows what he's doing, and he's a great executor. And, you know, the cool part about it is that he can manifest the future. I don't think that's BS. I'm going to get off this subject real quick. I'm going to tell you quickly update on the Iran-US war. I thought this was a very interesting post because, you know, you hear about the Karg Island takeover with special ops. I mean, this is pretty crazy. The New York Times writes Monday afternoon, senior military officials are weighing a possible deployment of a combat brigade from the Army's 82nd Airborne Division and some elements of the division's headquarters staff to support U.S. military operations in Iran, defense officials say. A combat brigade would suggest some 3,000 additional elite soldiers, as the thousands of Marines currently still en route from Japan as well from San Diego. All this comes amid speculation that could order some kind of assault and takeover. We already know that there were missile strikes at Karg Island out there. We don't have any idea when troops would be on the ground there and what kind of takeover it would be like and what it would look like. I'll read the last paragraph. It says, who's quoting here? All this comes amid spec that Trump could order some kind of assault takeover. I don't know why this is in italic, but let's just read this last thing. In that scenario, it is possible that the troops from the 82nd Airborne would augment the Marines. The upside of going with paratroopers if they can carry an overnight. The downside is they do not bring any heavy equipment, such as heavy armored vehicles that would offer protection. If Iranian forces counterattacked, current and former officials said. Hopefully this is very quiet. You know, of course, Lindsey Graham said if we can do Iwo Jima, we can do this. The problem is the more it's discussed about in the media, the more Iran has a plan to combat this situation. But guys, I think this is going to happen. Somebody had said, isn't this, I don't play video games anymore, sadly. I wish I did. I wish I could just sit on my couch and play video games all day. But like one of the Call of Duties or something, like there's a whole, it's a pretty popular, I guess it's a popular part of the game where you take over Karg Island. But I mean, there'll be movies made out of this. I can just see it. I'm not manifesting this. I don't want to see anyone get hurt. I don't want troops on the ground. But it is kind of like a special ops. It is kind of something like intel with the satellite information we have. You know, I think that this is going to happen, and I think it's going to be breaking news in like 2 weeks or something, or a month, or even this weekend. I don't know. Nobody knows. I'm just saying I do think something like this is part of the story. And I think that it's going to be a big deal. And I still think, you know, we're going to see a bumpy stock market here through April because of a news story like this. And I think that isn't this how U.S. wins this war and we can flip the chapter on this one? Isn't Karg Island that important? Let me know what you guys think. QTR had a guest writer called John Hoffman at Cato Institute. It's titled A Strategic Failure in Iran. The uncomfortable truth is that no one, including the Trump admin, knows where this war will lead. Obviously, John Hoffman is not a Trump supporter, I would say. It seems pretty biased to me. I don't really want to talk about it. What I wanted to talk about was, I mean, look, I like to hear all sides. I don't necessarily agree with everything he's saying, but there are certain things I agree with. What I found really important was about the uranium enrichment. It says air power alone will not destroy Iran's nuclear program because it's like underground to get to. Critically, Iran still possesses nearly 1,000 pounds of highly enriched uranium, or HEU, enriched to 60% purity, close to the 90% required for a weapon. U.S. intelligence suggests that Iran is capable of reaching some of the HEU buried underneath the facilities bombed last June. Trump is now reportedly weighing sending U.S. special forces to seize Iran's stockpile of HEU. But this carries tremendous risk. It is virtually impossible to know where all of that is hidden. And even if Washington did, successfully extracting it from deep underground while under fire would require massive ground force. So this guy brought that up. I thought that was interesting. You know, he's calling this isn't a forever war. He should accept losing and just get the hell out. I'm not going to give you my opinion, but I mean, I don't like that we're in this war either. But I think that it's a choke point for China and oil, and this is part of his plan. And he wants to be a historical president and go down in history for doing all these crazy things and being bold and brave and risky. And that's what I think. And of course, of course, Iran's not our friend. So there were like a few reasons. It's the same thing as Venezuela, the same situation. Anyway, I love these headlines that say Sherwood News, which, you know, is owned by Robinhood, I guess. It says Bitcoin jumps following Trump saying he will postpone strikes on Iran. After dipping to a 2-week low, Bitcoin rallied to break 71,000 Monday as traders turned optimistic over the conflict in the Middle East. The whole point I brought this up is how stupid is this? This part of the paragraph. This is my whole point to Rigatoni Capital, is being a long-term investor and not trying to trade, and that trading in something like Bitcoin is almost like a hoax. If you're trying to time the ups, the downs, the jumping in and outs, like if you're a retail investor doing that and you don't have an actual structure where you're selling puts, that's a little more complicated or whatever it is. Selling puts isn't complicated, but I know my friends don't do that. They're jumping in and out of stocks like they're college kids, just playing DraftKings or something. It's so stupid. Look at this quote. If it slips under 65K, we could see a quicker drop towards 60 to 62K. On the upside, getting back over 69K to 70K would flip the mood more positive and open the door to 72 plus K. This week should stay choppy and range bound. Wow. Like, that's a real thing. That's sad. I think that's so embarrassing. So he's just drawing a few support lines and saying, yeah, if we break this support line, it goes all the way down to here. I mean, that is a very common thing you hear on CNBC and everywhere. I get that. And I like say that stuff, but God, don't trade Bitcoin. Guys, I'm running too late here. We'll talk about this another day. That the Pentagon to adopt Palantir AI as core U.S. military system. Palantir's Maven uses AI to help identify targets for strikes. I don't think the deal has been confirmed on like how much it's worth. Like it says, last summer the U.S. Army worth up to $10 billion. Those awards have helped double the company's stock price in the past year, lifting its market cap to nearly $360 billion. I don't know. We don't really know how much this Maven, Palantir. We don't know how much the Maven contract is worth. Okay. It says Palantir deployed its AI system to serve the Pentagon's Project Maven, which began as a drone imagery labeling program in 2017. In 2024, the Pentagon awarded Palantir a contract worth up to $480 million. That year, Palantir's CTO, Shyam Sarkar, told the House Armed Service Committee that Maven had tens of thousands of users and urged Congress to provide more funding. In May 2025, the Pentagon increased the contract ceiling to $1.3 billion. I think they just did an extension of the contract. I'll do a little more research on it, but this video was really cool because it came out 10 days ago. The multi-domain AI, the future of command and control. This was about Maven. And then like a few days later, we heard, last Friday, we heard about this extension of the Pentagon and Maven contract for Palantir. So check this out.
And what we found when we looked at the AI into different types of workflows is that the system was wrong. This is Maven Smart System. Palantir's software as a service product that we are deploying across the entire department. As you can see, it's not just one data feed, it's multiple. And instead of having 8 or 9 systems for those decision makers to look at every single day in order for them to make decisions, you then fuse it into a single visualization tool. The single visualization tool allows you to select, deselect different types of data, look at different approaches to data, but more importantly, action from the same system that you're trying to develop your
Okay, so you get the idea. If you're watching the video, you probably can't really if you're listening, but this is the theme of the show. If you are a stock shareholder, you're a shareholder of Nvidia or Palantir, you have to do the homework. And this is what I'm kind of recommending you do, is go to Palantir's YouTube page, subscribe, crush the like button, but really watch this video. It's the second to last video that came out. It's called the Multi-Domain AI, the Future of Command and Control. It's 10 minutes long, and it's part of a presentation that, the Chief Digital and AI Intelligence Officer is making, Cameron Stanley. Aren't you interested in this if you're a shareholder? And then they just posted a video, it says 4 months ago, but I guess it was highlighted, but this video on Palantir's YouTube page, for access for all us retail investors, is the forward deployed architect Chad Walquist giving a brief overview of the ontology system at the heart of Palantir, AIP, and Foundry. It's a 5-minute video that explains to you what the hell ontology means and what the hell AIP needs and why would any company want it. And you can determine if this is a big deal or not. If the reason this is so important and the reason Palantir trades at 100 times, 80 times price to sales and the highest forward multiple of all time is because they think that AIP is going to be integrated in all Fortune 500 companies, or most of them at least. So all these industrial type of companies, the Lockheed Martins, the RTX, the Northrop Grummons, Caterpillar, all these type of old school, old time industrial type of companies that were using like Excel spreadsheets for procurement and dealing with problems and logistics problems and supply chain issues. AIP is supposed to automate this and make this easier for the entire company. And you can agree or disagree with if that is a good thing or if that works or not. But the whole point is that's why it's trading at such a high multiple. It thinks AIP and their ontology system is going to be adopted, and then and they have such a moat that once those companies like a Lockheed Martin uses AIP and Palantir and they get integrated with the system, that they feel like they can never leave, and they're so dependent on Palantir now, and then they end up even investing more in their technology. So definitely do your homework. It's a 5-minute video. That's my suggestion. I'm not going to play it right now because I ran out of time. Justin Banks on X says, the best buying opportunities of the last 10 years all came from the same spot. The retest of the previous bull in 2020, in 2022, 2025, and now it's at 611. Don't believe me, just look at the weekly SPY. And he shows you how true this is. But has anybody gone back to 2008 and have done this exercise? I mean, I can do it real quick for you guys if you want. Okay, I don't feel like doing this right now because I forgot I had all this bullshit lines on mine. Well, in my opinion, I don't know if it works for 2008 and 2001 or 1999, 2000. I just don't know. My point to to come back to this guy is, yeah, there's some truth to it. The problem is in my opinion, you don't need this chart to know when to buy. It can help. It can be one of 50 reasons on why you want to buy. But as a professional buy the dipper, which I am, this is not necessarily my signal. What my signal is when the market, like the S&P 500, is in a 10 to 20% drawdown, that's when I start looking. If it's in a 21% drawdown, I'm buying something. And when I buy stuff, I just buy and hold it, most likely. And then when it pulls back to 30% from the highs, then I buy even more. Or maybe and when it pulls back 25% from the highs, I buy more. 30% I buy more. 35% I buy more. Or you can do 30%, 40%, 50%. So each leg down, I'm deploying more. I'm trying to buy more. The problem is I don't really have a lot of cash. So in those scary times, not financial advice, I might have to buy on margin because they are once in a lifetime opportunities, and I'm not confident. I'm willing to take the risk that the market will eventually bounce back, that the US and the Fed will print money, and central banks around the world will print money and bail out the stock market. That's my thesis at Rigatoni Capital Portfolio. It's not that hard of a thesis, guys. I mean, it happens. It happened in my lifetime, so why wouldn't it happen again? Ryan Dietrich says on X, he says that, what was this about? Oh, yeah. He says these 3 charts are timeless and always come in handy in times like this. I guess when things are crazy volatile. I thought this was so cool. I mean, this was so cool. It says, how often does a 5% pullback turn into a correction or bear market? How often does a 5% pullback turn into a correction or bear market? Well, Neither. 63%. You have a 63% chance that it's not going to go down another 5%, which would be a correction. That's 10% total, or a bear market, which is technically 20%. So 63% of the time when we get a 5% pullback, the market isn't going to correct or be in a bear market. 24.8% of the time, it turns into a correction. So you got a 0.25% that's going to turn into a 10% correction. And then only a 12.4% chance that turns into a bear market. This is so cool. This is so cool. This is from Carson Investment Research, FactSet, March 21st, 2026. We don't know how long it says that chart 2, chart 3, it's not telling me how far this goes back as an average. It might be just 1980. So I don't know, but I think it's still worth looking at and saving it. It's so cool. I'm going to save this real quick. Sorry. Love this shit. By the way, there is a Substack writer called My.Stock.Research. My.stock.research. He did a deep dive full thesis on Oracle, asking if it's a buy now. I think it was well written. See, when you see these M dashes, usually it's a sign that it's being written by AI, which is fine. That doesn't mean it's not a good post. If it's just going into the details of, the valuation of the company, and, he goes through technicals, fundamentals, a lot of valuation context, a lot of good graphics. I think this is interesting just because, and then he gives a conclusion on what he thinks. And then it looks like he did this notebook LM or notebook, whatever, when you can make the graphic look really pretty. And it says Oracle's 553 billion AI backlog, why the debt panic created a buying opportunity. Concerns over Oracle's 91 billion net debt and 50 billion CapEx surge are weighted against a record 553 billion contracted backlog, RPO, presenting a potential margin of safety for its AI infrastructure transition. And then it has a really nice photo here that I'm not going to explain if you're listening, but my point to Oracle is that I own such a small amount of it. I don't know. I'm going to guess it's 1% of my portfolio. And I'm actually green on the stock. So I definitely am interested in Oracle, but it really was always a buy and hold. And it is super volatile. And I think it has a good reason to be super volatile. It really is a very risky bet that Ellison and gang are making over there. But, I think Oracle is going to be fine in the long run. I just think that the stock's going to suffer. Definitely going to be a macro cyclical situation here with interest rates and everything. I think they need to be careful. If you need to be careful, man, I would not like it if Oracle was like 10% of my portfolio. I would not be happy. I would be very concerned. This is just basic investing, value investing 101. You want to see free cash flow in the green and you want to see net income in the green. You don't want to see a situation where you bought too much, you bit too much off you can't chew. Is that the saying? I don't know. All right, guys. Sorry, I'm a little groggy and tired this morning. I was up late. What was I watching last night? Oh, yeah. Netflix stand-up comedy. I can't remember the guy's name. Very vulgar, but very funny. And Rigatoni Capital can be found on Substack, can be found on Spotify, and it can be found on YouTube and Apple Podcasts. Rigatoni Capital will be on, that's me, a podcast tonight, and I'm assuming it'll be a live show. I'm not sure, and it will come out either tonight or tomorrow, right, on Substack. And we can talk about what I'm going to talk about after the show. The theme is going to be about robots. So we'll discuss, the investment side of it. I'll discuss the investment side of it on the podcast. It's called The Podcast. It's with Phil Pinelli. The podcast is Power is Power or Power on Power. I can't remember. and it's on all major podcast platforms too. But really, it'll be on Substack and promoted on Substack the most, I think. So thank you guys, and have a wonderful day. Take care. Bye.